99.99999% of all algorithms, all traders of any kind are reacting to the market. They're not making the market move. They are reacting. All traders will say, hey, if they get to this level, then I'm going to buy. That's reacting to the market. So the market is making movements that everyone is reacting to. They're not dictating what the market does. They're reacting to the market. And that's how all trading systems, all trading approaches work. Certain conditions have to be there for a trader to say, I would buy here under these conditions. And if those conditions happen, then he buys. That's reacting to the market, not creating the moves, but reacting to the market. And if the market starts to go up after he buys, but then goes down and stops him out, then he reacts to the market again. If the market goes up and hits a target that he's identified that's important to him, then he is reacting to the market again. Everyone, including everyone listening to me, is only reacting to the market. Boy, if my RSI gets under 20 and the MACD is at this position and the red line crosses the blue line and the market comes back to touch this, moving average, then I'm going to buy. That's reacting to the market. Everybody is reacting to this market, not creating its movement. You may think there are special people who are creating the movement of the market, and you're wrong. That's not how it works. If there were special people creating the movement that you see, they would have to check in with us here to know what the market's going to do, because there's certainly not by accident or coincidence that every time we make a forecast that the market runs to some distant target, that's those people creating that, right? How would you explain that? It doesn't work that way. They're not creating those moves. The market itself is the energy that creates those moves. All the buyers and sellers, they provide the energy, and the market has its own nature and it expresses that energy. If I feed you a lobster dinner, right, and you eat that lobster dinner, you're going to convert that into energy, and you're going to use that energy to express your nature. If I then feed you a Mexican taco dinner, which is completely different food, it's going to get converted into energy. Is that going to make you act differently? No, it's energy, and you're still going to express your own nature with that energy. So in this analogy, you are the market. The food is all the traders. There's people buying, there's people selling, there's Mexican food, there's lobster. All of it goes into your tummy, and you produce energy to express your nature. That's how the market actually works. Everyone wants to believe there are special people moving the market, very important people. And indeed, there are attempts to manipulate the market. One of the big banks recently got fined $1 billion or $2 billion. It was the largest fine ever for placing spoofed buy and sell orders in the market. That simply means that they place a large number of orders so that every other participant can see those orders that they want to, say, buy the market up at a certain price or sell the market down at a certain price. If clients of a very large brokerage, big clients, big boys, the kinds of people that you would say are the ones that move the market, if they want to buy gold, they don't want to buy it at its current price. They want it to go down some, so they buy it at a better price. That's what they would want. And the broker, if the broker is willing to break some of the rules, he is going to place orders down, and a lot of them, down to sell the market, as an example, gold, way down at lower prices. And he's going to place a whole bunch of those orders. When the market gets close to those orders, he's going to pull them. Now the market's gone down, and the theory is that the market, it tends to be attracted to this big group of buy or sell orders because everyone can see them. So honestly, I don't even believe in that. The market doesn't move because people place a bunch of orders somewhere. The market only moves according to the energy that is provided to it and the nature of the market. But it is illegal to place spoofed orders, and this bank got nailed for it, under the premise that everybody sees those orders and it can be a form of market manipulation. So yes, people are trying to manipulate the market. That's true. The amount of manipulation is minuscule in actual fact because the market has its own nature, and it's merely taking the energy of buying and selling and using that energy to express its own nature. It's not doing the bidding of brokerages or really big people. If it was true that with $10 billion you could just push the market around, then everyone would open up a fund with $10 billion and do that. But many funds have $10 billion and have gone away. Many funds have $10 billion and have very poor returns because they can't actually do that. They can't push the market around. George Soros himself has said, if I had never taken the trade to break the Bank of England, his British pound trade in the early 90s, the market still would have gone down. He didn't make the market go down. And in fact, it was many days after he had placed his orders. He had placed $7 billion worth of orders to make the market go down, and it didn't go down. It was several days later when it finally broke, according to its nature. So the premise that, the big boys come in and they place their big orders and then the market just goes to where they want it to is complete nonsense. It doesn't work that way.